What's going on YouTube? My name is Jake. So what is the best ETF? How do you invest in the entire stock market, okay? The stock market historically goes up over time, right? So you can invest in single stocks or index funds or ETFs. You can invest in ETFs like Vanguard ETFs like VT, VXUS, or VTI, and VU. The VU is pretty much just the S&P 500. It has a little over 500 stocks in it. It's the top 500 stocks by market cap, okay? And it's pretty much 98.98% in the USA. So the thing about VU is almost all of its stocks are in the US. So that is a good diversification if you want the best companies in your ETF. Now, it's not the best diversification if you want exposure to international, because international actually goes up as well, just not as fast as the US market goes up. However, international does do better than the United States every once in a while. So if you take a look at this chart, alright, the US is the blue, and then the foreign international is the orange. Okay, so as you can see, from 1969 to about 1970, the US did better than international, but from 1971 to 1974-5, the international did better. Sometimes some things happen in America, or the United States of America, that causes our stock market to not perform very well. So right now the US is outperforming international. How much longer are we going to go before international starts outperforming us? Alright, so we have this huge inflation spike, and the US dollar is losing value every day. However, the entire world holds the US dollar, so if our currency crashes, everybody crashes. It's not just us, you know. Back to my point about the ETFs, the Vanguard ETFs. So if you want to invest in international, there is a stock called VXUS. VXUS is a pretty good index fund that has a decent rate of return. So the life of the fund is about, like, if you invested into the fund in 2011, you would have a 5% return year over year. The last year was about a 5.65% return. It is like a hedge against losing all your money whenever the US crashes compared to whenever the international crashes. Now, the reason there is a VXUS international ETF is so that you can buy it with a USA ETF. Alright, so this is the total international stock index fund. So this index fund has every single stock that's international. So Asia 40%, Europe 40%, North America 7%. You don't see the USA on here. That's what you're getting when you invest in VXUS. Now, there's another ETF called VTI, and VTI is the total US stock market. For some reason, it doesn't say the name right here. Total Stock Market Index Fund ETF. So this is pretty much the entire United States stock market. So if you look, it's 99.17% United States, United Kingdom 0.43%, which is nothing out of the 4,139 holdings. So VTI has a really good return, okay? And the reason I'm telling you this is because you can, like, buy VTI and VXUS and have a good, like, ratio, right? Say you want 60% US exposure and you want 40% exposure to international. Now, if you would like that, you could go actually get an ETF called VT. So Vanguard Total World Stock Index Fund. VT is actually the entire world, international and United States. Well, it's 58.73% United States and then 40% international. So if you can see, you know, it'd be like having these two stocks right here, but in one ETF. If you didn't want 60/40, you could just go get, like, let's say you want 70% US and then 30% international. So you could just get 70% VTI and, you know, 30% VXUS. Or you could get VU, which is the S&P 500, the top 500 companies, which is pretty much in the US. You could actually get VU. Let's say you want exposure to the top 500 companies, and it actually has like the highest returns out of all of the ETFs that I just showed you. These three, VTI, VXUS, and VT, are like the three best Vanguard ETFs, like for retirement and savings, you know. Now, right now, the stock market is going down. It's consolidating. So year to date, VTI is down 9.71%, and VT is down year to date 7%. So, I mean, your money is safer in VT. However, VTI will get you more gains if the US outperforms international. I think that VTI is really good. VU's 1 year is 23.29% gains. VTI is 18% gains on the 1 year. And VU is down 9%, 9.1%. So it's not as down as much as VTI, but it's still down around 9%. So that's the risk of buying in stocks, you know, like buying stocks is risky, buying ETFs is risky. We don't know what is going to happen in the stock market. Now, if you buy VU and you panic because it went down 9% and you sell, yeah, you're going to lose your money. But historically, over a 5-year period of time, the stock market always ends above 5 years ago, since a certain time period, right? So in 5 years from now, this is going to be a lot higher than it is now. Like it could be like 10% higher, it could be 20% higher. You don't know what's going to happen. Now, I'm kind of glad that we're consolidating, because we need to consolidate the stock market. Everything was just running up too high, like all these like momentum stocks and stuff. So once everything settles down, it's time to start investing again. Or you can just invest with a dip. We don't know if it's going to keep dipping. We don't know what's going to happen. There's a lot of stuff going on right now. And the Biden administration, you know, they want to invade, they want to protect Ukraine, and they're going to raise, and then the Fed's going to raise interest rates. I think the stock market is pricing in the interest rates, you know. So, like, that's why whenever they said we're going to increase interest rates, the stock market tanked, because we're pricing it in. You know, everybody, and now it's like settling down. So now the stock market knows that interest rates are coming. So it's possible that whenever the interest rates do come, that the stock market doesn't tank, because we already priced it in. Now, the next interest rates, I don't know what's going to happen. With Ukraine, I don't know what's going to happen. I mean, you literally heard that that Russia was pulling troops back from Ukraine, and then the stock market shot back up. And then whenever we said something about Ukraine, the stock market tanked. I don't know. So you never know what's going to happen. Like the COVID thing, the Ukraine, another war, it could crash the market for a little bit. But it's going to recover. It's going to recover. Everything's going to be okay. I'm just going to keep investing into VU, VTI, and VT. So pretty much, if you're like a normal average investor and you just want to slowly build wealth over time, this is what I'm going to do, is pretty much just put like, I don't know, you could put 90, you could just max out your Roth IRA every year with these stocks or these ETFs that I talked about. You don't have to choose these ETFs. You can do your own research and pick whatever ETFs you want. You could get the Spider ETF. I'm just saying, and like these ETFs have the lowest fees. They're better than mutual funds. Like these are way better than mutual funds. Now, VXUS has the highest fee of 0.08%. which is about $8 for every $10,000 you invest, but VTI is only 0.03%, which is about $1 or $3 for every $10,000 you invest. Okay, so here's the thing. If you get a mutual fund or a fund that has like 0.5% or a 1.5%, most mutual funds have like really high fees and you have to pay taxes on them. And it's like a 1.5% expense ratio, which is like $15 or $150 for every $10,000 you invest. Now, once you get your whole like Roth IRA or whatever established, then it's time to go into stocks if you want. You don't have to do it. You could just put all your money into ETFs and slowly build your wealth over time. And then by the time you're like 65, you'll have like $1 million if you invest consistently or max your Roth IRA every single year. And then there's safer like routes you can go. Like once you're older, you can invest in bonds and stuff, so you have even less risk in the market. Or you can get target date funds. But you have a nice day. Thank you for watching. Hit the like, the subscribe, and the notification bell. Like, subscribe. No, wait, yeah. Like, subscribe. Like, subscribe. Alright, have a good night. Thank you for watching. See ya.